Your bias is meant to be tested. If it wasn't meant to be tested, then everybody would be doing it, right? Everyone would be profiting. And honestly, the more repetitions you put in the market, the more time you put in, the more that you understand, like, if I enter this trade and price chops around here, let me open up a chart for reference for a second. Let's say, like, I open up this trade over here. This is the exact scenario that I'm talking about as well. This is literally exactly what had happened, right, on BTC. We had this position here. It was nice, but we weren't all the way filled. We rode up 4% up to here, took some profit, came down, chopped around, all weekend, did nothing until we came down and swept. That is our bias and opinion of the market being tested. And then we just relonged. If we exited that trade, break even, in profit, we wouldn't be riding this candle up today. And when you scroll out, obviously it's a small candle relative to the rest. It's a candle nonetheless, and it's a candle that people are aping to catch, or people are shorting on pops. So people are getting fucked one way or another on this candle, but we're in from the bottom. We're able to make our moves. We're able to take profit. We're able to do things at the smarter end of the range, right? At the more extreme end of the range. If you guys have watched my videos with Castillo, we talk a lot about that. A lot about, entering in, scaling bids, having a bias, having a perception of the market, and entering accordingly. And what I think is beautiful about, the indicator that we have here is that you get to see your levels really fucking quickly, and you'll understand if you're wrong pretty fucking quickly. So let's just break down some top down. Let's do it like that. If anybody has any questions or they want to reflect a bit with me, if you want to hop on voice and chat the shit up, you're more than welcome to as well. But for now, let's just let people get a second to get in. What's up, Rookie? Oh, Rook, I'm going to get back to your DM in just a sec, bro. I promise, bro. I've been fucking hustling the charts, bro. Mew, good to see you, my boy. Absolutely killing it, bro. I was with Yoshiro this weekend, bro. We were chatting about you, man. Yoshiro's he's a character, bro. He's a character. Nah, he's a good dude. He's a good dude. Bro, I've known him since I was in high school, bro. He's literally the reason that, that I got back into crypto after coronavirus. He's the reason that I got back in. Yeah. His greatest I was about to be there. I was gonna say his greatest accomplishment is literally calling me to say, Robert, you get back into crypto. That's his biggest accomplishment. I was literally serving at Applebee's, carrying plates, and then he calls me and says, yo, Rob, this is the bottom. And I'm like, bro, what are you calling me about? And I looked and I said, you know what? Let me get into this shit. It's popping guitar. Good to see you, my boy. What's up, Trade Dad? How you doing, my boy? Good to see you as well, bro. What's up, Kim Possible? See you. Just give me a sec, guys. Give me a sec. Not going to keep you here too long. Just want to do some monthly. Let's do a top down. Let's see what's going on. Really, this area, to be honest, I've already explained myself when it comes to the levels. So I really just want to just close out the levels and kind of see where we're at here. Starting from the higher time frame, go down to the lower time frame and catch a good drift that way. When it comes to the higher time frame, it's good to do this every single month. It's good to open up, your weeks doing this. It's good to open up your days doing this. But really, the price action has been kind of crabby. So if you're doing this at least once a day, what's up, Trade That? If you're doing this at least once a day, you're doing yourself a service. And really, you don't have to do this every day. I mean, it's always good to understand what's going on. But, on the higher time frame here on the monthly, we're going to take a look at the monthly closure. And my God, is that a horrendous monthly closure, like just absolutely horrendous. We closed a fat, heavy candle below that February low plant that we had earlier on in the year. So we closed below that, and we're looking to push this candle. We're looking to push this. We're looking to push this candle and reclaim it. But I'm gonna be honest with you guys, the way the month looks, we're gonna need a lot of juice to hold up towards the highs here. It's important to look at these higher time frame charts, though. I think a lot of people overlook that. But yeah, anyway, we swept this low, and we didn't close above it, so we didn't confirm an SFP on the monthly. The weekly looks horrendous as well. Everything's not looking the best, but things can start to look good. And what I anticipate to happen is, I think that we're going to test the median end of this block previous on the weekly. You see how we printed this supply level here? I want to show you guys a similar situation where a similar supply printed. Granted, it was more towards all-time high, but we had one up here where we fell down, we held this supply candle, we moved up, right? Swept the highs, came back down, confirmed this SFP, and then we went down further. This same sort of price action is happening here. So we printed the supply, we held, we swept the high, we came down, and look what's happening from here. What I want to see tested in the beginning of the month is for us to at least test this middle line. But again, that's just straight from a higher time frame perspective. That's what I'm looking at, right? That's the first thing. The second thing that I like to look at is obviously support resistance. I have my levels, so I don't really need to do that, but I'm going to do it for the sake of, analyzing. From these previous highs here, we were able to kind of chop around before rejecting into this May 2021 range of consolidation before pumping up into new all-time highs that then eventually took us into that 2022 bear market. Okay, so that's a key level, clearly. We came back into 2024 after closing above and flipping this level, right? After multiple deviations, we had a nice inverse head and shoulder here. Along the lower time frame, look a lot more clearer. And then we push back up and flip this level. This is a key level, whether you like to look at it or not. And that's what price action tells you. You look at it, price action tells you that this is a key level to flip, right? And then it eventually does. You want to tie in, a good chart pattern. You want to tie in a little trend line break and retest. You can do that. However you enter plays is however you enter plays. But that's on you and the confirmation plus confluences that you're taking into that play. A lot of people like to wait for reclaims and confirmations. And a lot of people question, what is a reclaim and what is a confirmation? It's exactly what I'm showing you here. You can take this deviation, this high or low, and then this candle closure and push above. That's a reclaim. You can take this trend break and retest as confirmation. You could tie in your, RSI retesting the 50 here. We flicked up here and then we broke out. That's confirmation. There's a lot of ways that you can distinguish what a reclaim and what confirmation is, but your levels matter. And the time frame that you're debating on that flip matters as well. You can see a flip happening on the 15-minute, but on the 4-hour, it looks like we're putting in a bearish retest. You could take a trade on the higher time frame and you not realize that the lower time frame is showing signs of aggressive continuation. So that's kind of how I like to look at my top down. That's how I like to evaluate the plays that I take. These are the questions that I ask myself. I believe that, if you're not asking yourself these type of questions when you're entering a play or when you're looking for a trade, you're doing yourself a disservice. You always are going to do yourself a disservice if you do not do the basics. These are the basics. So yeah, we have our weekly level. I don't want to draw levels up here. I don't want to cloud too much of a vision, really. I would draw a level sort of higher than where we're at right now. I think that 69K level is a good level to draw regardless, either way you look at it. 69K, the meme level, it's a level that we topped off previous. Price consolidated around and rejected before we broke up to new all-time highs. We broke through and have not put in a clean bearish retest of that level yet. I said it, and I said it often. That 69K level is going to react eventually. It reacted it reacted super volatile when it was retested here, right? Super volatile to the upside and to the downside. We put in that higher low before we pushed up to the most recent highs that we have here at around 82.6. Then we broke down. But remember what I said. Things can be happening on the lower time frame that might not be happening on the higher time frame. So just because the higher time frame here broke down viciously and closed does not mean that you couldn't catch a lower time frame play at around that level. And I'm going to show you guys that right now. So this is the candle that we're going to look at, this weekly candle. We're going to go down to the daily. And I'm going to show you guys that, like, just because you didn't catch it on the weekly does not mean that on the, you know, on the 1 day, on the 12-hour, on the 8-hour, on the 4-hour, there was some sort of candle that showed you on the lower time frame that maybe you should get in a short. Maybe, you know, you don't look for longs. And this hourly time frame is really the only time frame that showed you at around the 69K level that this is probably where you're going to do a short entry. And this is where the market wanted to react for short continuation. Clearly, we had a breakdown, a close, oversold territory, right? We moved down. We had the RSI flicking up when price was flicking down. These are all signs that price is probably not done cascading. Easier said than done, but reflecting on the past, is what's going to help you get your future plays. I know a lot of people, they don't like to do it. They like to think that trading is, a one-stop shop. I'm here for a month. I should know everything. But it's not. Taking losses is paying tuition. That's part of the game. If you're not taking losses, you're not learning lessons. And this is how you do it. So right now, we're leaning on a key level just by looking at what I'm looking at right now. What I want to show you guys is indicator levels, because that's exactly what we need to pay attention to right now. I'm already in longs from lower. Obviously, anybody that's paying attention to me should be in longs from lower. I'm going to show you guys two things. I want to show you guys the indicator levels and then the Monday range, and that would distinguish the price. That would distinguish my opinion and my analysis for the opening of the month. It really is not rocket science, and I want to show you guys that it's relatively quick to do. I'm just, talking about what you could have done and so on and so forth. So on the weekly, we do not have our confluence zones. We have levels, right? We have levels. We don't have our confluence zone. The levels matter, but remember, there's levels, there's a few different levels. And let me just take off what I drew. You see what levels we have on the weekly here, okay? Let me actually change the color to these levels so you guys can see what I drew. What I drew is in blue, okay? Indicator levels are obviously in white. So I'm going to hide the levels. I'm going to open up the zones because the zones to me matter more than the levels. The levels matter for deviations. The levels matter for flips. The zones matter for conviction. The zones matter for max conviction. And on the weekly, we don't have any of that. On the 3-day, we do. On the 3-day, we have that 59.2, that 59.1 level, which we're holding above. We slipped down below. So if you did not, if you didn't, look how beautifully we moved right down into that 57.7 level. That comes from my top-down analysis. I know what that level is, which is why I was willing to bid into it. We bid into that ever so flawlessly yesterday. But that's the level that I showed you guys just now. When I go down to the 1 day, we get more of a confluence zone here stacked up because we get more time frame conviction. We get the weekly, we get the 3-day, we get the 1 day. Those are levels that stacked up together that the indicator compiled into one zone to show you that this is a good level to bid. If you're looking to bid a level, you bid this level. You don't really overcomplicate the situation at hand. And to show you guys, when I open up my levels on the 1 day and I close my zones, you're going to see that single 1 day level right down there. That's your level. As long as we're closing above it, it should be good. If we close below it and we begin to lose, then you should look for a flip and a sufficient invalidation enough for you to target the next level lower, right? Invalidation is a whole nother story. I'm going to create a write-up for invalidation. I think that's a really good write-up that I want to give to you guys. I have not started working on it, but it's something in my to-dos. I'll do a write-up on invalidation. I'll do a video for you as well. I think that once you understand where to put your invalidation, you'll understand the time frame to play, and you'll understand how loose and how tight to be, or if your invalidation even makes sense. A big problem I'm seeing lately is people using, too tight of an invalidation inside of a 4-hour candle. If you take a play here, let me move it back, candle. If you take a play on the last candle and you're looking for a long, let's say like me, I like to look for liquidity to be target. We pumped here, we swept this liquidity, we got long on that liquidity there. That's beautiful. That's our entry. So we're looking to target highs, 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 right? Shorts are doing the adverse and they're looking to target lows, they're looking to target all the lows previous, and so on and so forth. If we're targeting these highs, and we're not in position from the lows, and we miss this 4-hour pump, you have to look for a legitimate position that makes sense. People are taking shorts with their invalidation above the highs, with their invalidation above these highs, with their invalidation above these highs, with their invalidation above these highs. Whatever the case may be that they're doing to take their short, they're doing that. When you're doing long, you're doing the same thing, but you got to understand that you're putting your invalidation in a certain place for a certain reason. And on this 4-hour candle, let's say you wanted to target this high straight off of this push up here with your invalidation below that hourly low. Why would you do that when the 4-hour looks like this? That means your invalidation is in the middle of a 4-hour candle that just printed on a Monday low reclaim after the monthly closed. Why would you do that? Why would you do that? And if the answers make sense, like we broke the highs, we didn't break the highs. We, broke the highs, flip structure up. We flipped the Monday low. We have news that this is doing that and that is doing this. Cool, sure. But there can be a retest that happens within this 4-hour candle on the next 4-hour that takes you out of that position, retests the break that we had here, and then moves up past that. That would take you out of your, that would not only take you out of your position, but would probably be a winning position as well. And that's a learning experience for you. You're going to want to tie an RSI, obviously. The RSI is looking to break the 50. That's more confidence for you to take the long for sure, but it's also confidence for you to be a little bit patient as well. I don't think that you should be aping in a play like that. If you weren't willing to enter at the lows here, why would you be rewarded entering at the highs there? Right? You got to be asking yourself these type of questions as a trader, especially a trader using confluences like this, because you don't want to be like, you want it to make sense. You don't want it to feel like you have a shadow of a doubt. So if you have a shadow of a doubt, you don't take the play. It's okay to have a shadow of a doubt, but don't take the play if you feel like your play can potentially be, if you think your play can be more ways wrong than right, then you shouldn't be taking that play. Again, too, like if you're let's say I took a long down here and I'm closing a small portion of it. Have reasons to close that short. If you're taking a long and you're closing positions, like if I'm looking to close that fully, have a reason to short the market, because you're doing the adverse of that long position by closing your long for profits. So that matters as well. And another thing that matters, as well as your supply zone, or as this same thing that matters when you're looking at support resistance on the top down and your levels, supply and demand matters as well. Supply and demand is a big factor in my trading. And when higher time frame supply and demand zones are broken, like I explained in the beginning of the stream, this supply level here, whenever these levels are broken like this, that means something. Price came into this level of demand here. It held, closed above the whole time until it began closing below. We put in a retest, swept the high before it went further down and closed below that zone. This reaction matters. It's not a confirmation that we're going to go lower, but it's important to realize that if we pop up and the lower time frame begins to look good, you know, you're not aping for no reason. So if you're entering this long, looking at the demand zone that I just showed you, maybe it makes more sense because now you have a little bit of confidence to target the midline. But given momentum, there's also a possibility that we chop and sweep this flat candle low before going higher. And that's the nature of the market. That's the nature of how liquidity has been moving. Always keep into account liquidity. Liquidity matters more than I think a lot of people pay in mind. You guys can see here on the heat maps. We're going to flash the heat maps. And there's nothing of relevance here for you to really, ape a play. If we're going to flip anything, it should be that 59.4 region. We should be flipping that level and holding if we're going to do anything. And that would go in line with a potential sweep of that flat candle on the hourly there. So few things that I look at. Obviously, we can flip this level up here, which would be that exact demand zone that I showed you. And then it would be looked at as this price action was just a deviation at that level, which is what I'm treating it as. That's why we're entering in at the extremes, guys. We're entering in at the extremes. We're twapping in, we're DCAing our bids at the extremes so that we're not worried about this. Alts are better to play there than BTC is right now anyway when you're playing in the middle. I would just long stronger alts if you think we're going to leg up because the stronger alts are going to move harder. So does anybody have any questions? I know I'm rambling. I want to make sure you guys, one, understand what I'm saying. Two, have your own perception of the market. And three, ask questions. If you're not asking, there's no stupid question. The stupidest thing you could do is not ask a question. I appreciate it, Kim. I'm glad that you guys are getting something out of this. That's why I like the Monday, Wednesday, Friday stream schedule that I plan to do right now. I think that's a good split, especially in the beginning of the month, right? I think the beginning of the month it's important to understand higher time frame and a lower time frame. Understand your confluences, understand the levels, understand the reaction, react on the good side of momentum. We're going to make sure to post this video for you guys as well. Gatal is going to clip it up as usual. Yeah. Other than that, I don't want to overcomplicate things so much. Like I could hype. I missed my bid. Oh wait, 1 second. I actually want to show you guys one more thing. So on the Monday range, I really enjoyed this indicator that I have for the Monday range. Now I switched from the other one because the other one's not available for me anymore. On this chart, I have it on my other chart. For this one, I can't. But I like this one because it shows you the previous ranges that have occurred within the last month. I like this one because it can show you like the sort of hit rate you're looking for. We had one reclaim on the Monday range. We had a rejection on the Monday range. We had another rejection on the Monday range. And now we're having a flip. So we're going about 50-50 for reclaims right now as far as the Monday range goes. And I took that into account in my trading. Everything matters. The more you have to gauge to get into a play, the better off you're going to be. So we've almost concluded the whole Monday range here absolutely beautifully. I mean, it does not get better than that. We anticipated it and we caught it on the deviation. So yeah, as far as everything else, like with alts and everything else, I'm not going to look at alts right now. I want to see what happens to everything else, right? Like for crypto total market cap, we're at like a same level, I would say, like on the weekly right here, like we are on BTC. Obviously, the chart's going to be somewhat similar. We're holding stronger than we are on BTC, which is why I say if you think BTC is going to leg up, long the strongest alt, because odds are they're going to pump harder. If we pump to 2.15 trillion, then hype's probably going to move harder. Zcash is probably going to move harder. Zcash, even we had a phenomenal entry on that. I mean, you could even, just indicator levels. You cannot fade these levels. I'm telling you guys, you cannot fade these levels at all whatsoever. It's important for you guys to trust your confluence and understand. Like, if you just looked at the Zcash levels from higher time frame, lower time frame, weekly, you got nothing. 3-day was the first sign of zone. So remember, when you replay the price action previous, it's going to show you the levels that occurred previous. Levels are constantly updating, but your higher time frame levels are going to last longer because they take longer to play out. And if you were patient for Zcash, I mean, I called the 374 level, right? But if you just were patient and you bid the 393, it worked out once. It came down, deviated, swept, came down again, held, and now it's holding right now. All you needed was that. And now you're in an 8% trade upwards just by trusting your confluence. But again, I said invalidation matters. So your invalidation with that trade would have to be a little bit loose, right? That being said, what I'm going to do here is I'm going to show you guys how to tie in the level. So I know that can be a little bit tricky. So what I'm going to do here, I'm going to take off the zone there on the 3-day. I'm going to open up the levels. Okay. And what I'm going to do is I'm going to go down to the 4-hour, and I want to show you guys how you could have caught that Pico position right there. Bam. 370 on the dot. It does not get better than that. Like, it really doesn't. There's going to be a deviation of this level after we break down, right? Because the lower time frame is looking a lot worse than the higher time frame does, because the higher time frame is swinging. We're waiting for closure on the higher time frame. While the higher time frame is closing, there's lower time frame candles that are printing, and there's levels to be executed on. This 372 level for Zcash was literally your prime real estate into oversold territory. I mean, it's just beautiful. It does not get better than that. Hourly, you're going to have more levels, which is why I love the confluence zones. But when you scroll out, let's say like, let me get that level planted by myself. On the 4-hour, bam. Now I'm going to turn everything off. I have my 3-day confluence zone, and I have my 4-hour level right down below. When price comes to that level, you should be getting your divergences. You should be getting reasonings to get into a play. Granted, like over here on this deviation, you had like really clumped up price action into oversold territory. You never really got that confirmation until we pushed down into that level. And then you got your RSI divergence begin to stack up at that level. And this is the confluence I'm talking about, guys. Like, whenever you have an understanding of your levels and an understanding of momentum and the price action that you are being presented right in fucking front of your eyes, you're going to understand when your divergences are going to flick up. Your divergences, more likely than not, are going to stack up at these key levels. Realizing that is important, because then you realize when to react. It's not random when I react. It's because there's reasoning. And you can understand all of that just by looking at, I think my internet just went out. Yep. You guys are, oh no, it didn't. Perfect. And you could follow me along by using the indicator that I present to you guys. I know I keep shouting indicator from the skies, indicator from the skies, but guys, I believe like there's not a magic indicator, right? There's not one magical indicator. And I believe that any indicator you guys can get your hands on for a specific strategy that you understand you follow can work, but it's what you make of it. If you follow me and you understand what I'm doing, get the indicator, because you're going to get my literal levels that I'm looking at every single fucking day. You don't have to do anything. You just have to sign up using my ref, get access now, and enjoy it. If you're in WG, you had an option this last weekend to get access as well. All of you guys have been granted, but we're in the midst of building a lot of cool shit, and I want you guys to be the first to get access to that. How you growth managing your emotions, and you start with the markets. Yep. So how I started with the markets, you came a little bit late, Bobby. Good to see you, by the way, Bobby. It's been a long time. I'm gonna post that video up. I already went through that in the beginning. Emotions, you guys see it every day. I am my harshest critic. But when it comes to emotions in a trade, you have to be willing to trust your bias. You have to be willing to trust your bias. If you're not trusting your bias, you're doing yourself a disservice, because you would be left in a position like I could have been today if I didn't trust my longs from this weekend, right? I would have been flat. I would have been a loss if I went flat. And in my eyes, if you're flat on a good read, that's a loss as well because you're not capitalizing on your read. Granted, it's okay to preserve capital in times of uncertainty. It's okay to preserve capital in the beginning of the month. It's okay to conserve capital whenever the Monday range hasn't confirmed. It's okay. But what's not okay is missing out on strict opportunity that's directly presented to you in front of your fucking face, especially if you're trading on an exchange, because exchanges, and I'm explaining this to you guys here, exchanges are extracting from you one way or another. If you sign up using an exchange, the exchange is taking your money. They're taking your fees, right? If you sign up using a referral link, at least you're getting access to tools, potential kickbacks. If anybody is providing sufficient volume and they want to explore kickbacks as well, let us know. There's options for you. But the key thing that I'm trying to say here is that if you're doing it on your own, you're getting fleeced. Even if you're profitable, you're still minus EV right when you get in the exchange because you're getting nothing from them except to use their platform. And they want you to use their platform because they know, one, they're having your deposits, two, they're getting your trade fees 100% to them because you're not using a referral link. And three, you're not getting anything for it. At least you get something for this. So yeah, guys, I appreciate you guys coming by to start the month off. I think that was a beautiful top down to start the month. I'm going to have the video posted rapidly. Guitar's going to clip it up for you. This was a good start. I'm glad we're already in a position so we don't got to really worry about too much here. But you guys know where to find me. Talk to you guys soon. Let's get it popping for this month, guys. Peace.